Welcome to FinCorp 360, where finance becomes simple, powerful, and practical. In today's video, we're breaking down one of the most important concepts in accounting: assets. If your business shut down tomorrow, what would actually remain? Assets are one of the three pillars of the accounting equation. Officially, assets are probable future economic benefits obtained or controlled by an entity as a result of past transactions. Sounds complicated? Let's simplify it. The word probable means nothing in accounting is guaranteed. Some customers don't pay. Some go bankrupt. So accountants estimate losses using something called an allowance for doubtful debts. Let's talk about future economic benefit. If you buy a laptop for $1,000, it won't stay worth $1,000 forever.
We reduce its value over time. This process is called depreciation.
It spreads the cost over its useful life. Now here's where accounting gets interesting.
Control matters more than ownership.
If a company controls a building for 60 years, it may treat it as an asset. All assets appear on the balance sheet.
They are divided into current and non-current assets.
Current assets convert into cash within 1 year. This is the operating cycle of business. If you're a student, mastering assets gives you confidence in exams. If you're a beginner, it builds your foundation. Thank you for learning with FinCorp 360. Subscribe now and take control of your financial knowledge. Your journey to financial excellence starts today.